Okay, that's my bad. So, all right, here we go. So, the business uses credit and pays the bills timely. A positive business credit profile is established. As the business keeps using the credit and pays bills timely, it will qualify for more credit. The perception lenders, vendors, and creditors have of your business is crucial to your ability to build strong business credit. Before applying for business credit, a business must ensure it meets or exceeds all lender credibility standards. There are over 20 credibility points that are necessary for your business to have a strong, credible foundation. It is vital that you use your exact business legal name, okay? Your exact business legal name, exactly how you got your, or how it's printed on your certificate from the Secretary of State, okay? You can build business credit with nearly any type of corporate entity, all right? But what you really need to know when you set up your name at the Secretary of State is that they're gonna ask you to select an entity. In order to separate your personal liability from your business liability, you must choose an LLC, limited liability corporation, or a corporation. If you select a proprietorship or a partnership, then you are personally liable for whatever happens with this business. Whether or not you have employees, your business entity must have a federal ID number, the EIN. You cannot build business credit without an EIN number. And there's two things you need to know about the EIN number. You can't build business credit without an EIN number. And two, it's free. That's what you need to know, all right? You get it free, irs.gov. Takes you 15 minutes, all right? Boom. All right, your business address. Okay, this is key. You see I got it listed, 1, 2, 3. There are 3 options to select your business address. There are no options after these 3. You got a brick and mortar. You need to have a place where you can accept packages. The second option is a virtual office address in which you can get for as low as $50 a month, okay? And the last resort is the home office. Now, I say it's the last resort because creditors and lenders do not perceive home-based businesses as being credible, but they look at it on a case-by-case basis. For instance, let's say you're doing hair from the house, right? Well, they might think that, hey, you might be able to pay that bill by doing hair from the house. But let's say you are a trucking company. Well, maybe you can't have all those trucks at the house. And one thing to note is that on your Dun & Bradstreet business credit report is a Google Maps picture of your business residence. So they're looking right at your crib when they decide whether or not to give you this approval, right? It cannot be a P.O. box or a UPS address, all right? It definitely cannot be a P.O. box or a UPS address for your business address. The reason why is on the application, there's a field. It's just a bunch of fields, right? And in the address field, what they are doing is pulling up a database of all P.O. box numbers and all UPS addresses. If your address comes up on one of them lists, then they can deny you and they don't have to tell you why, okay? Some lenders will approve and fund. Some lenders will not approve and fund unless these criteria are met. Da Vinci, this is my go-to for virtual office. You go to businesscreditbuilder.us/vendors and you're gonna see a telephone number to call, a person to ask for, and there's explicit instructions to get the right business address. Da Vinci Virtual Office Solutions. You can't use any address, okay? You can't use any address, all right? Because your address needs to be unique to your business. Like when you go to Google and you start typing in an address and you know how it self-populates the address before you type it, that's how your business address needs to be. All right. So with Da Vinci, they have a form that they send to the post office so that your business is signed up right with the unique address for your business. all right? So those virtual companies, those virtual address companies, there are virtual address companies out there that will give the same address to 100 companies. You don't want that, all right? That can draw a flag, all right? Okay, you got to have a local business telephone number. You must have a dedicated business telephone number listed with 411 directory assistance under the business name. Lenders, vendors, creditors, and even insurance providers will verify that your business is listed with 411. Now, this is a step that you don't skip. This is not the step that you say, well, I'm just going to do this with my regular telephone number. It won't matter. Nope, this will matter if you don't do this step right here, okay? All right, lenders view 800 numbers as a sign of business credibility. So what is necessary is the local number. An 800 number is not so necessary, but it looks like you're a credible business when you have a fax number and an 800 number with that number that is listed, okay? That's the rundown. A cell phone or a home phone number as your main business number could get you flagged as a non-established business, which is too high of a risk, all right? Okay, credit providers will research your company on the internet. So you need to have a website, all right? And a lot of companies, they do look and research you by checking your internet presence, right? So here goes my website information, right? My company is called MediaNet USA, and I have what we call the small business web hosting package. It's an all-inclusive package, which means you don't have to do anything. I do it all right? You get, this is what you get: domain registration, 12 months web hosting, website design, monthly updates, unlimited emails, expert customer support, internet consultation, all right? And that starts at $350, and then $350 for the first year, and then it renews at $150 each year, all right? So you can't beat that either, all right? It is important to get an email address, a business email address. You got to have a business email address. What you should have is your name at yourbusinessname.com. Lenders do not want to see you doing business from a free email account. It's just common sense stuff, but it's good to know, okay? Your business banking history is vital to future success in securing larger business loans, okay? So when you got your Secretary of State name and you got your EIN, I know we're running out of time, I got you. Okay, so when you got your Secretary of State and your EIN number, you go get yourself a bank account, all right? Non-matching business addresses. Okay, so business licenses. If you need a license to operate your business, just get it. Most people got the license, but the most common mistake is they got their license, but they have an old address on their license. They could deny you for that, and they don't have to tell you why, all right? Okay, make sure you verify the main agencies, the state IRS, bank, 411 National Directory, have your business listed the same way on your, with your exact legal name, okay? Make sure your business is listed with Dun & Bradstreet. So once you got all that basic stuff out the way, the name, the EIN number, your telephone number listed, you got your bank account now, and the website. Now we're gonna run over to Dun & Bradstreet and get a free DUNS number, okay? That's what you need. You need a DUNS number. And when you apply for the DUNS number, it's gonna take about 30 days to get this DUNS number. And in between that time, they're gonna email you and they're gonna call you and they're gonna convince you that you gotta buy something. But I'm letting you know, the DUNS number is absolutely free. The free, all right? That's what you need to know. Okay, learn how, let's see, what are we talking about now? Learn how many trade lines are reporting. Okay, so once you get all that stuff set up, now you want to understand why you need access to your business credit reports. The three main business credit reporting agencies are Dun & Bradstreet, Experian, Equifax, Okay, those are the three main joints. All right. Now you need access to your business credit reports so that when you are getting these trade lines and making payments, you want to make sure that your payments are getting to your business credit profile accurately and timely. And it's they don't always do what they're supposed to do, because these companies that we buying stuff from, they're in the business to make the sale. They don't put much effort into after the sale transaction. So they don't care if your trade line got there or not, okay? Sometimes it don't get there. That's why you need a consultant to be up on this stuff and to know when there's an error and know how to fix errors. A lot of people don't even know that there's an error going on until it's way too late, okay? So that's what we do. We make sure that your process of building business credit is smooth and efficient, okay? Okay, so what we're gonna do now is turn it over to ROK Financial, and they're gonna tell you about all of the situations that they have. We have Andrew FIORE here, right? Did I pronounce that right? Correct, yeah. And we have Nick, I don't even know how to pronounce your last name, Nick. Cantatori. It seems like I'm going to an Italian restaurant and I'm eating good tonight with a salad and with Italian dressing. All right. So let me see who checked in first before we turn it over to you. Let me see. Yo, bear with me here. We got Jasmine, Illinois in the building. Shy Armstrong, she got the laundry service in Georgia. And she got a mobile bar. Word. Okay. Let's see. Nakati. Oh no, I'm messing up your name already. I know that. I'm just gonna call you Nataki. Oh, that's how you pronounce it. Nataki. See, I'm learning. All right. She's Well Balanced Bodies, LLC, Massage, Body Works. Okay, she's in Atlanta. Bet. Okay. Do you need me to have my presentation, or how you gonna do it? Yeah, I actually just. This is a mic, or you could just run it. Oh, let's see. Let me just bring it up so they can see it. Yeah. Let me bring it up. I got it. Yeah, come on over. Yeah, make yourself comfortable. There's Nick coming up. Yo, we setting up with Nick. Hold on 1 second. Let me stop this share, and then we're gonna do this. We're doing this off the top of the dome, as you can see. So bear with us. Here, I see that presentation. Let's just download it. Save. And we're gonna save it on the desktop real quick. Boom. And then we're gonna open it. Where'd it go? Hold tight, y'all. What is this? Okay. It should be right here. Oh, there you go. Oh, it's a PDF. Okay. So boom, now I'm gonna share the screen again. Where's the thingy? Ooh, I don't get it. Let's see. Hold on. Exit minimized. Okay. Share.
Actually, click that link right there. It should work.
Oh. Boom. There we go.
I think you can put this full screen as well.
full screen. Let's see. I'll do this full screen, right?
Yeah, it should be under file, maybe, or view.
Yeah, I was looking for view. Let's do it. I think that's the best we could do right now.
Make that work.
Yeah.
Let me try to toggle with it.
Okay. So cool. Ladies and gentlemen.
Hello, everybody.
This is Nick.
How are we doing?
And you can just take it over from there. There you go. You can use that too.
I'm going to try to get this full screen real quick. Usually there's a way. All right, we could run it like this. No big deal. All right, everybody. Thank you for coming, and thank you for taking the time to hear us out here at Rock Financial. Now, as Noel's going over, we have a ton of different programs and products to offer. So kind of just wanted to give you an overview on each one and show you how each one works, to see if you'd be a good fit for the program types and the parameters. So, basically as an overview on all our products, we require about 3 months time in business and about $10,000 a month in gross revenue in order to help. So, obviously we have an array of different options and programs for people. Each programs have different requirements. However, generally speaking, as a business, that minimum requirement is 3 months in business and then $10,000 a month in revenue. So just to jump into our Rock product playbook, this is the key. And I'm going to send Noel over a copy of this so he can send it out to all of, your followers here. To first thing we're going to go over here is a term loan. So basically for a term loan, just to go over the minimum qualifications for this, we need to see about 6 months in business for this program, about 120,000 in gross revenue, which is just about 10,000 a month. Typically, generally speaking, we don't need any minimum FICO score. Now, with that being said, if the credit is low for various reasons like defaults on previous loans, it may be a challenge. But just the other day, we helped somebody out with a 450 credit score. So generally speaking, no minimum FICO required. Typically what these terms look like, they could be anywhere from a short bridge for 6 months for, a business owner that just needs a little bit of relief until receivables clear, all the way up to 10 years. The time of funding, as far as the process here, could be 1 to 3 days. So depending on the overall ambition on the business owner end, we can get it done within 1 day and then 3 days at the very latest. Also depending on how much, you're going to be taking here. But basically what a term loan is, it's very similar to bank style financing. We try to match it on a minimal scale. So what we do is we provide a business owner with a set amount of money with a set payment schedule. So it's no sliding scale of rates and terms, that have people guessing half the time. Everything is fixed. In your agreement, it's fixed. You're going to be borrowing A, you're going to be paying back B. Here's your prepayment incentives if you were to pay it off at this time. And, basically it's very laid out and structured. The benefits of this type of program are there is of interest forgiveness. So basically when you go to take money and refinance a loan, they do waive the remaining costs for you, which is very cost effective to business owners that continuously can find themselves using capital. There's going to be no prepayment penalties on any program that you take out. So if you were going to borrow this money for 30 days and pay it off, you will only be paying 30 days of interest. So it could be very cost effective depending on the way you use it. We have some lower cost options depending on the term you borrow. And typically what we see is weekly and monthly program types, depending on how frequently the business owner would like to pay. Usually somebody like a restaurant or a bar would like to make minimal payments throughout the month. So they'll do it more like on a weekly payment, and then your construction business or your trucking business that gets paid monthly would usually like to see monthly payments. Most importantly, like we were going over before, this is going to help improve on the credit business as well. So this will report as a trade line on your DUNS number, your Experian business credit, and obviously that's going to open the door for you on other programs going forward. And that pretty much wraps up the term loan. Very fixed, very structured program for people that just are looking for a little cash infusion with set terms. Next, we're going to jump into the SBA loan, which I'm sure a lot of you know of, being that we just came out of this pandemic and a lot of people got assistance from the government and from the SBA. So it's a little bit different from your typical, PPP loans and your EIDL that have been forgiven. What we end up putting together is usually a 7A program, which is 10 years, fixed rate, 5%, anywhere from 4 to 5%, depending on where the rate is for the day, right? It's prime plus 2 typically. But it's a government-backed loan, so this is going to be your absolute best cost for unsecured money, and it could be used for starting or expanding a business. They usually don't want it being used for real estate acquisition or anything like that. They really want to focus on the business or expanding the business. And basically, it's going to be similar to the term loan as far as what it looks like in term. It's going to be up to 25 years. Loan amounts up to $5 million. Here's a little bit of a kicker, which I'm sure all of you know, being that you probably dealt with the government on some of these other loan programs. They are 90 to 120 days terms. They're very backed up as 90 to 120 days in funding process. So they're very backed up. You're not going to see 1 to 3 day funding. It is a little bit of a longer procedure to get done, but for your qualified business with 120,000 a year in gross sales, 3 years time in business, no loss on tax returns, you're very strong business. This is going to be the absolute best cost on the dollar for you. Prime rates up to 25 years, monthly program payments. And, of course, it's government backed, which is always keeps your money a little bit safer. Now, what we end up doing a lot of is we do a combination of both of these programs. So as you know, being a business owner, there may be a situation where you have an opportunity in front of you and you'd love to get that SBA program, but you might not have the time to wait that 90 to 120 days, right? Even though you're extremely qualified. So what we're able to do is we're actually able to do our hybrid SBA program, which we are very effective at. And anybody who takes an SBA loan will usually enroll in this program. So what it is it's basically a mixture of your term loan and your SBA loan. It's a cash infusion. So let's just say for the next 120 days, a business owner needs $50,000 before they get their big SBA loan. What we're able to do is we're able to structure a term loan in a way where we're providing an infusion with no UCC filings. That's not going to affect your overall SBA loan while we're working on the SBA to close. So now your business owner has an opportunity to start expanding or, using the capital for whatever they need, and then also working on the SBA simultaneously. So when the SBA loan closes, they pay off the term loan. They only pay X amount of interest for as long as the money's been held out there. And they, overall, they just turn that term loan into an SBA loan. So it's for those that, can just use a little bit of money now, but ultimately want that SBA and just need a little bit of a lift to get there. Now, this is a big one for a lot of businesses. As you know, any business really could have used some extra capital during the whole COVID situation, right? It's just good to have additional capital sitting there for when you may need it. So this program's been huge for us lately. And, we typically see 60% of our business owners qualifying for this product right now, even if it's on a minimal scale. So basically, it's our business line of credit. The way it works is we do give you portal access. So you will get a username, you're going to get a password, and basically as needed, you can go right in the portal and draw money when you need it. It's very flexible. Typically, let's go over the qualifications first. 6 months time in business, 600 FICO, which the qualifications have been lowered since COVID. I think we got an email that starting on August 1st, they're going to be taking 580 plus. So if you're not quite at that 600, don't worry. It's still worth sending to us. We need, same qualification as far as revenue. We need to see about 10,000 a month in revenue. And of course, at 6 months time in business. But basically the way the program works is you're set up for X amount of dollars, right? Let's just call it 50,000 for this example. You have it sitting in an escrow account, and anytime you needed funding, you simply sign into your portal, go in there and draw it as needed. If you needed $5,000 one day, $10,000 next week, whatever the scenario is, you have a constant access to it at your own pace. So you're not having to call a bank, you're not having to call me, you're not having to basically put loan docs together on the spot. It's all already set up and there for you when you need it. So, a lot of people are just kind of having this on the side in case something comes up. It works very well for your people that are going to be returning the money quickly. So not sure who's out here as far as industry wise, but we have construction and transportation are going to be the most popular. Well, let's expand that a little bit. Construction, transportation, medical, and your manufacturing companies are going to be huge for this, because basically those are people that are looking to use the money. Those are business owners looking to use the money in injections and pay off quickly. So I'll give you an example. Our construction guys love this because, basically, let's say you're set up on a 12% annual rate and you're approved for a $100,000 line of credit. You can use that $100,000 for projects. So let's say you have a project that's going to last you 90 days and you're going to be paid out in 90 days, in 3 months from now. People are able to go to that line of credit, draw that 100,000, put it back in 3 months when they're paid on the project. That 100,000 only costed them about 103,000, and then that 100,000 that you just paid back recycled. So it's a constant flow of access to money for when you need it, and basically the money's going to recycle to you as it's paid down. Of course, you're only going to be paying interest on the funds that are drawn. So whatever's an active balance, you're not going to be paying on that. Whatever you're not using, you're only going to be paying on the money that's outstanding. Similar to a credit card, very similar to a credit card. And the way it works is similar to that first credit card you get as a teenager. They'll start you off with a $5,000 limit. They're going to make sure you're responsible. Not saying that they're going to start you with 5 here. Our average size for a startup line is typically around 50 to 60,000. But once you show them they're responsible and you can use it the right way, they will, of course, look to increase the credit limits and give you better terms overall. This is a monthly program, monthly payments. Typically, they'll go anywhere from 10,000 to 5 million. We've seen larger lines than 5 million. Of course, the revenue is going to have to justify that. Terms are going to be anywhere from 6-month revolvers all the way up to 24 months, typically, on the unsecured. Anything that you'd like to collateralize with real estate, you'll see 2 to 10 years with.
Now go over the qualifications for that.
Yeah, so similar qualifications, basically 580 FICO plus we'd like to see. So, this is a little bit outdated. Come August 1st, they're going to be adjusting this, but 580 FICO plus, we're all good with it. 10,000 a month in revenue and about 6 months time in business, and we're good to go.
All right, I think that's going to open the doors for a lot of people right there.
And it's just good to have. You might not need the funding now, but as discussed, as business owners, you might have an opportunity that comes to you tomorrow, right? And just as quickly as they come in, they can go right back out because somebody's going to scoop it up. So you want to just make sure you're super prepared for those opportunities, depending on what industry you're in. It could be a million different things, and that you have that access to the funding to jump on that. So equipment financing, this has been huge, especially out of COVID, because a lot of people are just continuing to expand. So basically, it's real simple. Going to just jump to the qualifications. We can do startups with this program, which is huge. So if you're just looking to get started in business and you want a truck, let's just say, because you can get a contract with, let's say, Amazon or UPS, and you just want a truck. A lot of the companies out there are going to require that you're in business for 2 years to even look at it. We're all good with startups as long as you have a 580 FICO, and basically you have a business plan, right? What are you going to do with the piece of equipment? What is it going to generate you? Is this all lined up? And basically, what the terms look like on this is anywhere from 1 to 5 years, 1 to 5 day funding, which is very quick for equipment financing. Usually, it's anywhere from a 2 to 3 week procedure on that as well. So 1 to 5 day funding. We, especially if we have a pre-approved vendor that we've done business with before, it could be done within a day. So it's all about just making sure that you are prepared. You have the invoice, you have an application, you have good credit. Okay, you'll be all set for this program. It's multi-year, like we were discussing, 1 to 5 year terms. A lot of it's going to fall between 3 to 5 years, depending on where the credit's at, and loan amounts from 10,000 all the way up to 5 million. Now, with that being said, if you are a brand new business, you're probably not going to get a loan for up to that 5 million unless you have excellent personal financial situation going on there. But typically on the starter program, people are getting approved from anywhere between 80 to 250,000 on an opening piece of equipment. Accounts receivable financing. So this is another one that's been huge, especially, just climbing out of COVID. A lot of these insurance companies are very slow to pay right now. Your typical home healthcare business, your medical business, dentist, it could be, anything, right? Chiropractor. A lot of these companies are just out there and they're getting slow paid by all these larger insurance companies. And it's making it real tough on a lot of these businesses out here. So this has been a huge program for us. Basically, what we do is we provide a revolving facility for accounts receivable. So somebody provides us an invoice. Hey, this is how much I'm getting from Aetna, on August 31st, right? And we'll advance that that form, basically, that claim, right? So that receivable will be able to basically advance it 80%, just about. So if you are getting paid $100,000 from Aetna on August 31st, we'll be able to give you up to $80,000 on an upfront. And basically, when you get paid from Aetna, you'd pay us off and we take a small fee. Typically, it's like 3% or so, but your average receivable is anywhere from 90 days. So if somebody borrows $100,000 off a receivable, let's just say, a lot of business owners out there are okay with taking 97 now versus, 100 in 3 months from now, just because it keeps everything going in the business. It's very smooth and it keeps it in and out. So this is a little bit more of a secured product of ours. So all of our products are unsecured. We don't require any real estate collateral for any of our products or any equipment collateral, right? This is the safest program, I guess you could say, for us because we're collateralizing basically that invoice. So we know that money's coming. So with that being said, it comes at a cheaper rate because we're guaranteeing the money basically. So typically, 4% rate on an annual basis. It usually doesn't take that long to get paid back. Usually take a couple months depending on your agreements with your vendors, but it's a cheaper rate. And basically what it's going to do is it's going to help you open up cash flow in your business versus having to wait to get paid by all these other vendors. Now, the requirements on this are a little bit higher up there just because if you're getting paid by insurance companies, you're usually doing a lot better as far as gross revenue. So typically we want to see anywhere between 40 to 50,000 a month in gross, of course, a 600 FICO. So anywhere, 600 plus is going to be okay. Obviously, if you have an 800 FICO, it's going to help you get better terms. And an AR report that just shows the money that's going to be coming in the next, X amount of time. The loan amounts of this are 10,000 all the way up to 5 million. We're actually, not myself personally, but there's a colleague of mine that's working on a $10 million facility right now. So going back to it, if the revenue justifies it, we can involve multiple credit facilities to get to that dollar amount, basically. Terms on it are 6 months to 10 years, depending on how long the business owner needs, and 1 to 5 day funding. So you're going to see huge ranges here on terms and dollar amounts, right? With us, I'd like to say that we're one of the few companies out there that really want to hear the story, right? So, we're all real life humans here. We're not a bunch of robots that you throwing your paper into and an algorithm spitting out a number. You tell us what you got going on in your business and what works best, and we're going to go to our banks and make sure they put a program together for you that is going to be customized and custom tailored to your particular business. So we can make sure you grow, you borrow more money from us, right? And you continue to make money and create jobs out there, which is, all we really want to see coming out of COVID. Franchise fund financing. So you might not see too much of this, but basically we're able to help with the financing when opening up a new franchise, whether it's Dunkin' Donuts, 7-Eleven, gas stations. It could be a bunch of different businesses out there. So we're able to, basically set up the starting cost for that business. So for example, if a Dunkin' Donuts, 250,000 to finance, right? We can help put that together for a business owner and get their foot through the door. Usually they're going to require a down payment on this anywhere between 15 to 20%. So just make sure that you're prepared and you do have a little bit of capital to get started, just because the lenders want to see that you have, skin in the game, that you're interested in this. They're usually not going to finance it 100% unless you have perfect credit.
Skin in the game.
Yes, the biggest thing. I want to know you're serious. So yeah, and a lot of people, they think that to open a Dunkin' Donuts, you need to be liquid, 250,000 cash. That's not the case. We help business owners all day long get into these businesses. And, once you open one, you might see yourself opening the second, the third, the fourth, and it gets easier from there. So don't think if you don't have the full amount of money, you can't get in. These programs are being done all day long. Now, a little bit of we're going out more on a limb on this one because it's a startup business. You obviously have, if you're looking for franchise financing, it's going to be your first franchise, just because after you do complete one, a lot of these companies out there will offer that second location or the third and finance it itself. So we do want to make sure you're qualified and that you do have skin in the game, as we discussed. So we usually want to see about a 640 FICO, a little bit of a stronger credit profile, anywhere between 10,000 to 5 million that we can do. 2 to 7 days funding. It's a little bit of a longer procedure just because of the logistics behind it. They want to see franchise agreements and all of that. But typically your first franchise will be anywhere between like 80 to 350,000. We don't see many more than that unless it's a huge location, but that's pretty much where it's going to fall. Between 80 to 350,000 is the sweet spot. And 6 to 10 year terms on payback, 6 months to 10 year terms on payback. Not many people are borrowing this type of financing on 6 months. They want to stretch it out a couple more longer. And merchant cash advance, which we do a little bit better than the other companies out there. So when people think cash advance, they're thinking high cost short term. We base it, and this is why we hate calling it a merchant cash advance, because what we really focus on is more of like a performance advance. So what we are willing to do for business owners that might not be cash liquid, we're able to advance them on their processing. So let's say you're processing, you own a restaurant, right? And you're doing 100,000 a month, and out of that 100,000, 70,000 is coming through credit cards, which is probably the proper conversion nowadays with everybody paying on credit cards. We're able to basically go ahead and look at your credit card sales and say, okay, your cash flow, because you're only depositing 40,000 in the account, doesn't support much of a loan, but your credit card processing supports a way bigger loan. We're able to collateralize that loan program off a percentage of your credit card sales. So what we'll do is, let's say you're processing $100,000 a month in credit cards. We'll say, hey, we're going to give you $100,000, and what we're going to do over the next 2 years is take 5% of your credit card sales, right, until you're fully paid off. And that's what we do. Now with this program, there's literally nothing required. I don't need to see any FICO score. I need to see about 3 months of business at most, just because we know the money's coming in and we're going to be pulling it directly from your credit card processing. So at the end of the month, let's say you did 100,000 in credit card sales. Instead of getting, $100,000, what would be deposited in your account would be 95,000. We take that 5% rip in this example, and that will go towards your loan balance. So the cool thing about this is you pay back at your pace. There's no set term, right? So if it's going to take you 3 years to pay back the loan, it is what it is. That's on the lender. It's not something that you're going to be obligated for, and you're making a set payment every month. No compounding interest. It's a set cost. You're borrowing let's just say 100,000. You're paying back 112,000, whether it takes a year, 2 years, or 3 years. And basically, the funds could be for any use, which is important. They don't track this money. They're not like your Chase or your Bank of America that's going to ask you, what are you doing? Where are you applying this money? I've had business owners before that had to lower their tax liability. So their accountant said, hey, you got to borrow some money. And, they borrowed that money and bought their favorite sports car. So it's, it can be used for anything. We're not tracking the money. As long as you're paying it back, there's going to be no issue. And as I was saying before, no minimum FICO, about 10,000 a month in gross, and 6 months in business, and we're all good here. Loan amounts, probably very similar to what you're seeing throughout the presentation, 10,000 to $5 million. And same day funding, that's the key on this one. Because we know how much you're processing, it's very secure for us. We're all good, basically looking at those statements saying, hey, you qualify here for $20,000. We're going to plug right into your credit card processor. All you have to do is sign these documents.
Same day funding.
We love that, right? And that pretty much goes over all our programs. We covered a ton here, so I'd like to, jump into some questions that some people may have here that we can go over. Possible.
Yeah, who got questions? Anybody got questions?
I have a question.
Yes,
Go ahead.
please.
Okay, do you have any loans that so say like if you meet all the other qualifications, your credit is right, but you're a startup, and I have a trucking company, and I don't have the invoices yet, but I have, let's just say, $80,000 in the bank. Is there a loan against that? Because I want to buy 3 trucks and put them on the road, but I don't want to use all of my 80,000 to put the trucks on the road. You understand what I'm saying?
Yeah, of course. No, that would be, and you said just for me to confirm, you're looking for equipment financing, right? Basically on the trucks.
Yes.
Yeah. So with that, do you know what the trucks list at?
I can get them so if I bought them outright, they'd be like 35,000 a piece, but I would finance them. So then I won't have to pay all that money up front,
Yep, of course. No, that's great. And are you buying it from a dealership or a private party?
Say it again.
No problem. Would you be buying that from a dealership or a private party?
A dealership.
Perfect. So with that program, we're app only. On under 150,000, all we need is an application, as long as you meet that credit requirement. So if you have a 600 plus FICO score, I wouldn't even need to see your bank statements, your tax returns, your financials, none of that. Basically, all we would need to see is the invoice for your equipment and an application to make sure your credit's over that 600 threshold, and you're good to go. They'll verify the invoice with the with the dealership that it's legitimate and that you're looking to buy the truck and you're approved. So you wouldn't have to touch that 80,000. Sometimes they'll require a down payment on the truck, usually like 10 to 15%. So for each truck, 40,000, let's just say each truck, you might have to put down $4,000, give or take. But you'd be able to get into those trucks with as little as 4,000 times 3, $12,000 on the 3 trucks right there. And that's
Oh, okay, okay. So what I would be looking at is, so tell me again what like the stipulations would be.
Yeah, so it would just be an invoice from the dealership, just showing that, you know, the basically the truck, the mileage, you know, the information on the actual equipment, right? And an application from us to show that you're over 600 credit.
Right.
That's it.
So what do I got to prove to show that I'm over 680?
We'll do a soft pull in-house here just to verify that you're over that threshold.
Oh, okay. That's all I need to know. And
You
what type
actually
of
just
loan
send-
is that? Or is that equipment loan?
Yeah, that would be equipment financing.
Oh, equipment financing. Okay.
So instead of giving you like a loan and you're all of a sudden making these huge payments on it, we would just rather basically finance that piece of equipment for you. That way it's nice and secure, you have a nice light payment, and you're, you know, basically off to the races with them. You know, because especially trucking, we have tons of people every day, and once you finance the first truck, right? You're into the second, you're into the third. You're in an industry that's very growth effective, right? So, you know, with another truck, that might add another 10 to 20,000 a month in revenue for you. So the more trucks you have in the, obviously, the more revenue you're able to make. It's one of those industries that there's plenty of work out there. So, you know, definitely look to put that together for you. Absolutely.
Right. And not only are we doing like on the road, but we're also doing like teaching. You can get your CDL certification. So it's basically like a school, and then we hire them on for 2 years, and then they can work for us also. So we're hiring them after the school.
That's huge, because, you know, just with speaking to people in the industry right now, their biggest challenge isn't work, right? There's plenty of work out there. It isn't cash flow, because there's plenty of cash flow out there. It's more of finding the drivers, right? So I love that about your business. You know, you're offering the service to get these people approved to be a driver, right? And then saying, hey, here's a job, right? Done with that.
Right. Okay. All righty. So
Right, that was a good question too. Thank you for that question.
thanks.
Yep, so schedule a consult and we get you going right away.
Yeah, and that led me into another thing I wanted to talk about. As far as like, usually people are nervous when applying just because, you know, you're worried about your credit being ran and putting you in a worse scenario, right? With us, we do things a lot differently here. So we have a whole in-house, you know, we have a huge office here. We have 120 employees. We have a whole in-house processing team. So what we do is we do a soft pull on your credit to make sure that, you know, you meet the guidelines, of course, before we pair you with the banks. And then once we have that soft pull, we're sending the package to the banks completely packaged. So nobody's doing any hard pulls in your inquiry, or sorry, any hard pulls on your business, causing all these inquiries and putting you in a worse scenario. We're making sure all that due diligence is done in the upfront. Hey, you qualify. Here is the best banks to give you the best approval. And now with us, you know, basically handling that whole process, you don't have to worry about your credit getting impacted. There's absolutely no hard pulls with us. The only time there may be one hard pull, about 50% of the time, is going to be upon funding, after you say, let's do it, you know, and money hits your account.
What about refinancing vehicles?
Refinancing vehicles, it's a little bit tough. If you have that first note from us, we can do it, right? But if, let's say, you financed it with Chase Bank and you're looking to refinance that vehicle, a lot of times we won't touch it, because it's, you know, basically it's been a note on it. It's been out there for a little while. So, you know, as far as like cash out refis for equipment, it's a little tough unless we have that principal note. So if you take that note from us and then 3 years later you're trying to refinance it, we can do that.
Okay. Anybody else got some questions? I know y'all got something. Don't be quiet now. Okay, y'all sure y'all have no more questions? All right, was today useful for y'all? Was today
Absolutely.
useful?
Yes. Yes.
Cool,
It was
cool.
very
And I'm gonna come back and we're gonna do this one all over again next month. Next month, we're gonna do this one all over again. So y'all can have more questions. I think we got something in the chat box. Let's see what we got here. Oh shoot, where's the chat box? That Control H.
I'm gonna end the screen share.
Oh.
Yeah, that might be it.
Okay. I let's see, who's this? Miss Ivory. I operate a mobile bar and been doing research on hitch vehicles. Has durability. What's your question? What about smaller commercial vehicles?
Yeah, absolutely. We'll do that all day long. As long as there is value that it's going to bring to the business and increasing business, absolutely, we'll do it all day long.
Yep. All right. So yeah, so that hitch thing situation should do it. They'll do that too. Yep. So them hitch situations, I seen those. Yeah, you can do the hitch onto the truck and then sell your items out of there. Your bar be selling martinis out the hitch.
New York style.
Yeah. Hell yeah, there's a whole bunch of food trucks out here.
Absolutely.
Yeah. Okay. All right, everybody. I guess we're gonna cut this one and see y'all tomorrow for the big shabam where I'm gonna do how to get $250,000 in business credit for your EIN. It's not linked to your social, and how easily you can get access to business loans and credit lines. And tomorrow we're gonna go into a lot of details. It's gonna be the detail exclusive joint tomorrow, and we're gonna bless somebody at the end. But you got to be there at the beginning and you got to be there at the end to get blessed. Somebody's going to get blessed. All right. So thank the ROK family for doing this presentation for us. And how we do it was we put an A in the chat room. So that's our applause meter, right? So put an A in the chat room to for applause for our guest speaker today, Mr. Nick from Italy.
Yeah.
All right, everybody. I appreciate y'all coming out. This is your last chance. If you got any questions for these professionals, and I wish to be good as straight line as this guy. This guy is on point with his talking. I can't do it. Whoa, yo. All right, everybody. I appreciate y'all once again. Schedule a consult. All right, let me put that in here. How do you schedule a consult? You go to business, credit, builder. Oops, I can't type now. Builder.us/consult. All right, schedule a consult right away. We're gonna talk about the details and get all your questions answered and get you funded on those same day funding opportunities. Yo, the line of credit was good. The equipment financing, yo, it's easy to get funding from this company over here. Okay, I'm way out here in Long Island, but it's easier. I can see from the other situations I've seen. They do the soft pulls, which is a big deal, right? That's a big deal. The soft pulls. We just need, he went over all the details, and we're gonna do this again so y'all can get the details even better. I know I was off my game today, but we're gonna get straight. Tomorrow, make sure y'all hit us up for tomorrow. It's the spaces are running out. Today's was sold out. All right. So thank y'all once again. As always, I appreciate y'all, and I'll talk to y'all tomorrow. Same back channel, same back time, 6 o'clock tomorrow, and let's do it. All right? Y'all have a good one. Appreciate it.
Thanks, everybody.
Yeah.